So in this video, I'm going to cover the full Google stock analysis. This is right after their Q2 earnings call, a couple days after it actually. And we're going to go over all the different little details that could help you make a buy, hold, or sell decision on Google stock. Now again, they did just have their earnings call for Q2. They also, as far as any big news, do they have any big news going on? Well, right now, a lot of it's just, usual AI updates and things like that. They did apparently have some sort of $1.2 billion cloud contract. They've had a huge increase in their cloud business in terms of earnings year over year by more than like 30%, as I covered in a YouTube short. But as far as some other things about them, ChatGPT apparently uses Google search as a fallback in some cases. So even though ChatGPT is a competitor, they actually are using Google search as a fallback. And on top of that, if you look at Google's search business that allegedly was dying, according to some people, because of ChatGPT, well, apparently it's not. In Q2 2025, it's continuing to rise as far as Google's search business revenue. So in other words, Google's search business seems to be just fine. OpenAI doesn't seem to be hurting that too much yet, even though the ChatGPT has been around full time for the past 2 or 3 years now. And as far as how their stock is actually doing, today it's up 0.53%. Over the last 5 days, up 3.69%. They had a pretty good jump on the 24th after their earnings call, which was late on July 23rd. Pretty much great news all across the board on their earnings call. If you look at how they're doing in the past year, up 15.48%, which is pretty solid. If you compare it to the S&P 500, pretty close. The S&P 500 is beating them slightly over the past year by 3%, but not too much. And then if you look at the past 5 years, the S&P 500, if you had invested in that 5 years ago, would have returned 98.62%. Over the past 5 years, Google would have gotten you 156%. So still, people who invested in Google versus the S&P 500 over the past 5 years were happy with results. Not anything crazy like Nvidia, but still solid results from Google. It's one of those stocks where I think that some people view it as it's an older stock now. A lot of people, it's been around a while. People view it as something it's dominated search for years and years. YouTube's been around for years and years. People probably don't see Google as a new shiny object like Nvidia or some of these others, but it's just been a steady stock, and they're still not only dominating the present, but working towards dominating the future with things like Waymo for ride sharing and autonomous vehicles, as well as being one of the leaders in AI right now. If you look at their PE ratio, which is not the end-all be-all, we're going to show you kind of an alternative to this here in a second. 20.89 is pretty reasonable by most standards. A lot of people try to be around 20 or lower, or 25 or lower in many cases, but it also depends a lot on the type of company. A lot of tech companies will have higher PE ratios and maybe higher returns, which justifies buying a stock at a higher PE ratio. But with Google, you have a great tech stock that's actually got a pretty low PE ratio, so which is one indicator of many that maybe it's a fair price to pay for Google stock. They also offer a dividend. It's very low. Obviously, you're not buying this for the dividend, but if you wanted to kind of see a dividend, maybe even as an indicator of the company's confidence in how their business will be doing going forward, some people view it as not even necessarily, oh, I have to have high dividends for payment, more like, well, with certain tech companies, you might want to see even a small dividend just as almost a sign of confidence in their business. So EPS, they beat by 4.99%. Revenue, they beat by 2.54%. Quarterly financials look really good. For the ones that we do have so far, obviously some of these are not filled in yet because they literally just had their Q2 earnings call like 2 days ago. But revenue, operating expense, net profit margin, earnings per share look pretty good. Balance sheet, we're still kind of waiting to fill this out, but as far as some of these go, they were looking good before this. I was checking them periodically, and no red flags or anything really in that category. So I think once they fill all of that in, they will still be in good shape. If you saw my YouTube short about their earnings call, you will see that pretty much everything year over year was really good. You can also check it on the side here: revenue, net income, diluted EPS, net profit margin, all positive year over year. Now, another thing I like to look at is how are they doing in the past quarter. Sometimes if you just look at a company and how they're doing over the past year, the past 5 years, some people even look at the last 10 years, which a lot can change in 10 years if you just look at companies like Nvidia. But if you look at the past quarter, maybe you can kind of see where they might be going. Obviously, past performance doesn't equal future performance, but over the past 3 months, Google is up 17.02%. And if you compare that to the S&P 500, it is up 16.59% over the past quarter. So pretty much on par with how the market in general has been doing over the past quarter, which has generally been positive. You can also see that many people are buying Google stock right around the time, right before their earnings call and also after their earnings call. That's, of course, just regular people on Robinhood. If you look at hedge funds, some of them were selling, but that was in Q1. We actually don't have what hedge funds are doing in Q2 yet. I would be willing to bet that more of them will be buying than selling probably in Q2 as some of their concerns were put to rest. And also insiders, we just don't really have enough insider activity to gather a lot of conclusions. Many of these are just like one in a month or one in a quarter. So it's really hard to draw a lot of conclusions from how few insiders we have making deals here. But some of them had a huge vote of confidence, and then you had one making like 33,000 sold in July, most likely before their earnings call. Now, if you look at analyst ratings, this is a big one that I think has a little more weight in terms of an indicator versus, say, like what one insider is doing. You have 73 analysts that give them an 84% or so buy rating right now, which is really high, and 16% give them a hold rating, and not a single person is saying it's time to sell Google yet. They've also done really well on beating their earnings. So as you can see, pretty much every one of these, the actual earnings beat their estimated earnings over the past couple of years in every quarter. Now, another indicator that you could use as kind of a alternative to like a PE ratio, or maybe just another indicator to go with it, is the EV versus the EBITDA ratio. So EV, as you can see, stands for enterprise value, and kind of like the value of the company as a whole, versus what would be called the earnings before interest, taxes, depreciation, and amortization. So for instance, it was pointed out recently that Uber did some little loopholes that made their PE ratio look better based on some things that they did through taxes and accounting. And so their PE ratio, for instance, might not look as good in the next quarter. Not saying that like makes a big difference on Uber stock. This obviously not what this video is about, but it just goes to show you what some companies do to make their stock look better. So if you look at Google's ratio here of EV to EBITDA, it's 16 to 17 in that ballpark, which doesn't seem too bad in my opinion. Now, if you look at their PEG ratio, which actually helps you understand, well, their price, another indicator of, well, is this actually a good price for Google to buy, hold, or sell right now, versus what kind of revenue they are earning. Well, the PEG ratio factors in not just their price and their earnings, but their earnings growth over time. So forecast 12-month forward PEG ratio is actually 1.33 according to NASDAQ, and 1.33 is actually a pretty reasonable number. If you got over, say, maybe like 3 or higher or something like that, then that's typically considered overvalued. If it's way over 1, it's overvalued. If it's around 1, that's typically fair value in terms of price. And then if you look at, say, under 1, that's typically undervalued, which would be a big buy score. But it's very rare that I see one that's actually under 1, really, at least lately. Either way, a pretty fair value price right now, according to PEG. And if you look at what it's like to work at a company, how well run is the organization? This is something I think a lot of people don't talk about enough, or they jump to a lot of conclusions about without looking at the data. So what kind of data tells us that a company is a well-run organization? Well, you can look at what their employees actually say about working there, because they've actually worked there. Now, if you look at Google, they have a 4.3 out of 5 star rating overall from their employees. A very good score. Best places to work, nominated many years on Glassdoor for being one of the best places to work. And if you look at how many of them recommend working here to a friend, 85% is a very, very high score. And 77% approve of the CEO. More than 3/4 of their employees approve of their CEO at Google. All of these are extremely good scores for how well the company treats its employees and what employees think of their company. So we also have a couple other things to point out before we wrap this up. One is something that was not really mentioned a lot as a revenue source yet. If you listened to their earnings call or you saw my summary of it, well, Waymo is something that's one of the things that's a big part of the future. So if you look at, well, what's Google going to do to kind of be more than just a steady long-term stock that gets decent returns but maybe doesn't really outperform the S&P 500 by much? Well, what is something they're doing for the future other than AI? We all know AI, but as far as what else they're doing, robo-taxi services are a huge disruptor for the transportation industry. It's just a matter of time before this happens. That's why I mentioned it in past videos. It's a big race right now between Waymo and Tesla for the robo-taxi services. Now, they might both end up being pretty successful. Sometimes you have a system kind of like Uber and Lyft where they're both doing well. But if you look at Waymo seems to be in the lead. Why? Because they are actually doing well with a strong safety record with lower accident rates compared to human drivers, even those with modern safety features. They are actually available to actually test out these in Phoenix, San Francisco, and Los Angeles. They're also expanding into Austin and Atlanta. So they are actually expanding into more and more major cities. Now, if you look at Tesla is experimenting with this as well. They had a rough earnings call. But Elon is trying to encourage people to look towards the future with robots, self-driving cars, things like that. So they are in this race with Waymo, which is owned by Google, for the robo-taxi services. Now, as far as safety and regulations, this is a big part of what can tell you who's in the lead right now. Based on safety and regulations, Tesla, they tout a potentially lower cost and more scalable approach with its camera-only system, but it faces regulatory hurdles and has not yet proven the safety of its system in low visibility or complex scenarios. So they seem to be having a little more trouble with safety features than Waymo is right now. That's why some people are saying Waymo's in the lead versus Tesla for autopilot taxi services. And many of the ones that Tesla has tested so far has like a driver in the passenger seat. That's kind of like making sure that everything's going well, whereas Waymo seems to be fully autonomous already. So other than their cloud business expanding by like 30% in revenue year over year, as well as their search, YouTube, and AI revenue all going up for Google, also expanding AI solutions, like for instance with VO3 recently, where they had that big showcase. They have a lot of things going for them, and then you also add on them owning Waymo and possibly being in the lead. And mostly a two-man race, it looks like so far. There are a few others dabbling in it, but the robotaxi service could be a huge industry disruptor and lead to ridiculous amounts of revenue in the near term as well. All of that being said, I actually have Google as a hold right now. They do have some regulatory stuff we have to sort out, and they are a company that for whatever reason, a lot of people don't just get excited to pour money into their stock. I think it's because they've been around for so long. They don't, like I say, they don't seem to be that shiny new object that people want to put money into, like Bitcoin or something like Nvidia stock. But they are steady, and there's a good chance they'll still slightly outperform the S&P 500. And one of these things, like whether it's Gemini and a major AI breakthrough or a major breakthrough with Waymo, could make their stock soar even higher in the future. But right now, I'm sitting on a hold. I actually have some Google stock, and I don't know if I'm ready to just go all in and put a bunch of extra money in them yet. Obviously, none of this is financial advice, and your situation can vary as far as whether or not you should buy, hold, or sell.